Hey, what's going on everyone? It's Casey here. In today's video, I'm going to break down the process of how I find these levels and zones that I'm trading off every day. I get a lot of questions about what I'm looking for and how I find them, so I want to just make this video and show you how easy these can be to find yourself. I'm going to start with the previous day's high and low zones because those are the main ones I'm trading off when the market is kind of in this regular state and we're not getting these huge news-driven highs and lows. And then after, I'm going to show you how to zoom out a little on the chart and find the major areas of support and resistance. So let's start with the previous day zones. To me, these are the most important for day-to-day trading. I use them almost every day. I'm making them with this simple process of using the high and low of day wicks, and I'm creating a zone to the following candle body, like that. Low of day wick, following candle body. Again on the top, I'm looking at the high of day wick to the following candle body. Now what are these telling me? If we're in the middle of them, it means we're still in range of the previous day and that you might want to ease off the gas and maybe get into scalp mode and play it safe because neither buyers or sellers are really in control. We're just in a range. If we're below this level, that's a clear sign that buyers are in control and we're in somewhat of a downtrend because we're below the previous day's low. Same with the high. If we're above the high, it means buyers are in control. We're above the previous day's high and we're picking up momentum and we got a little trend forming. That's basically all that's telling you. So when you come into the market and we're below the previous day's low, basically I'm looking to short the pops. I'm not looking to go long on the dips. That's all that's telling you. If we're above the previous day's high, then I'm looking to go long on the dips. If we're in the middle, I'm looking to play it safe. So that's my main game plan coming into each day. From there, you can kind of use your own techniques of how you like to enter and exit the trades, but for the most part, below the previous day's low, you're shorting the pops. Above it, you're buying the dips. So that's how I draw the zones. Low of day wick to the following candle body. Now I'm going to rifle through a few days and just show you how well these work because I really think they're underestimated. See, even on these huge news-driven events, let's look at this day real quick. See, there's no wick on this candle. That's okay. You can just go to the following one like that. You're basically just wanting to note the high and low of the day. But look at that. This was the high of day. We explode off this huge news event. It sells off, and look where it lands. Directly on top of the high of day. That right there shows you how important this level was. You can just go back day to day and back test this for yourself because these are the main ones I'm trading off, and I'm going to show you why. You'll get why when we just go back about a week right here. Here was the low of day. I make the zone right here about to the pre-market low because I love the pre-market high and lows too. So when they're this close, just add it into your zone and make that your main area of demand for the next day. As long as we're above that, you're not really looking to go short, at least in a heavy position. So coming into this day right here, these are what my zones look like. I'm watching for a break of the top or a break of the bottom. As you can see, pre-market, it's bouncing off the zone perfectly again. As we open, it's holding. At this point, as it's rising up, you can buy the dips and maybe make this previous day's high your price target. As you can see, it wicks right off it here. So even though we were in range, it was a pretty nice size range. You could get some good plays here. The main thing is you're not looking to go heavily short because we haven't broken this previous day's level yet. And you're not looking to go long heavy on a long position either, because we're not showing a trend yet. It's trending up, but until we break the previous day's high and put in a higher low, this isn't a heavy trend. This isn't a day you want to size too big on. It's not showing any clear direction yet. I'm going to go back a few days just to show you guys how important these levels are. Here's the low of day. This was obviously a news-driven candle. You can tell by the size of it. It's about the size of 10 to 15 of these regular candles. But as you can see, even on these huge events, look where they slammed it to. Right to the previous day's low. From there, buyers step in. It starts rising up. Let's see where it ended. Top of the wick to the following candle body. You can see it get respected there. It gaps up above it pre-market, slams down, and where does it crawl back to? Right at the previous day's high. Sellers step in because it couldn't break. And where do we end up? Right back in our previous day's low demand zone. So this is kind of the map I'm going off every day. We're either in range, we're breaking out, trending to the upside, or we're breaking down, trending to the downside. Let's go back another day. What are we looking at here? There's the high of day. Let's bring a zone down. You can tell it's a nice little supply zone of how it's getting respected right here. So at the end of the day, when you're drawing them, you can already tell, like, okay, this is being respected. Let's see what happens the next day. I also will have my low drawn. You can see that getting respected as well. This is a clear, obvious chop day. The next day, we do break above it, but we continue to chop. So this still isn't presenting a good opportunity. I'm favoring long on this day here, but we're not seeing much follow through. Either way, the zone's telling you not to go short and chase these downward moves, because we're right on top of this zone from the previous day. So even if they're not getting you into like these amazing plays, they're helping you not go short where you're not supposed to, you know, or go long also where you're not supposed to. Look at that. You don't want to short these right here. We're right in top of our zone. As it bounces off, you can look to scalp long, because that's kind of the favor we're headed. If that makes sense. Now here's where they come in really handy. On the trend days. Here's where market opens. There's the following body. Bring it down a little. Right about there is my zone. So as we open up, I have these two zones, the high and low. We open up, it bounces off it, it's trying to respect it, then it breaks low. There's your sign that, okay, sellers are in control now. We broke the previous day's low. What are we looking to do? I'm looking to short the pops all day. I'm not looking to go long on any of these dips. That's not where the best risk reward is going to be, because we broke the previous day low and sellers are in control. Now coming into the next day, you want to know if this trend is going to continue. So the main thing I'm watching is this right here. If we break the low of this day, likely the trend continues. Sellers are still in control, and we officially have a downtrend started. This was a huge day right here. We had a big sell-off. The next day when it breaks the low, that's telling you the sell-off is still there. And you're shorting the pops all day. These are when you have your big days. There's a sell-off, consolidation overnight, and then we break the low again. That's telling you the trend is continuing. Now the next day, when everybody's really antsy to go short some more because they made so much on these first 2 days, and everybody's like, oh, the market's dying and full port into a short, all you have to do is watch that low again. There's the zone. Right from the low of day wick to the following body. It tries to break below pre-market a little, it pops back up, and what does it do? It holds all day. This is telling you, okay, we're in consolidation mode. You're not still going heavy on short positions like you were this day. Why? Because we haven't broken the low yet. This is a clear sign that either the trend is over or we're just moving sideways and we're taking a breather. Either way, you're not looking to short heavy positions anywhere in this day. We haven't broken the low yet. Oh, that doesn't work. I also use the pre-market high and low. Those are kind of my other main two levels I'm watching. And as you can see, right there's the pre-market high. This whole day we're ranging in between the previous day's low and the pre-market high. Another clear sign of choppy consolidation. It's telling you to play it safe. Buyers and sellers, neither one are in control. We're just ranging sideways. Knowing when to play it safe is a big factor in this market. So even on these massive moves like this, these levels are still my go-to levels. This was that huge FOMC move. I'll show you how I played it. Look at the previous day's low. Look where it bounced, almost to a T. You got your demand, your supply zone up here. Respected perfectly pre-market. Clear range. We're coming into the FOMC with a clear range to watch. We're looking for a break of the upside or a break of the downside. As it shoves above this high right here on this massive candle and pulls back, where you might be hesitant to go long because of such a huge move, we're confident in this because we're above our level. You might want to short this pop, but this level right here is telling you that that's not a good idea. We're above the previous day's high. Buyers are in control. When it comes back down, this was the dip I bought right into our EMA system that I always use. And look at that move we got. So even on huge news-driven plays, these still come into effect. You can tell right here. They brought it right from the previous day's low up to the moon. As soon as it broke this high, I'm no longer looking to short any pops. You're looking to go long on the dips. Okay, so that's pretty much it for the previous day high and low. I think that pretty much covers how important they are. They pretty much get respected daily, as we just saw. So let's talk about kind of these bigger swing areas on the chart. This is how you get the big levels. I'm gonna go to the 1 hour so they're easier to see. Okay, so here's our chart. Looking back about a month or so, I'm gonna stretch it out to make them even easier to see. What you're looking for, or what I look for personally, are these areas, these pointy areas that kind of just stick right out at you. They're basically screaming at you that they want to be noticed. And that's for a good reason. Those are the main areas where we're going to see big reactions. Here's one. Here's one up here. Right there. Right here. 414.10, that's obviously a big one. The price comes up, it hits these levels, and then sharply moves down, and then hits this level and sharply bounces up. Like, you're looking for that. You're looking for big swing points where the price moves one way, then drastically hits the level and moves the next. Where it bottomed out or peaked, those are the main levels I'm watching. They're screaming out at you that those are the ones to be watched. They're easy to see. They stick right out at you. Like, when you glance at a chart, your eyeballs almost naturally go right to them. And these are all levels that we played. 410, 403.54. That was a big level for us. And we had them all on here before. This was 390. Let me zoom out a little. If you remember, we had the 415 target this day where it sprung up to 414.10. That was simply from this right here. Right there. 415. Climbs all the way up, hits 415. Shoves down. That's a big level right there. Those are the ones you want to mark on your chart. These are major levels. Here's the next one. 421.02. Exact same thing. It climbs up. Major sell-off right at that level. That thing's screaming at you that it's important. So mark it. You don't have to be searching high and low in between these choppy areas for like 3-4 points of contact. I mean, that does work, but I'm just showing you the simple method of how to find these big levels right now. So we got 362.22. That's going to be a big level as SPY moves down and tests that. Everyone wants to kind of keep that on watch as we get there. What else we got over here? 368. 368.80. Sticking out below the rest. Price moves down. Sharply moves up. That's a big level to watch. Here's another one right here. Easy to see. 373.62. These levels are going to be in play probably like as early as next week, maybe the week after. If SPY keeps moving down, these are going to be your main areas to watch. We're going to be looking at 373.62, 368.80, and 362.22. These three levels right here, those are going to be your main three watches to the downside as SPY starts to make its way there. From there, you can kind of make your own zone however you see fit. Zones vary in sizes from kind of trader to trader. You can make them as wide as you want. I like to keep mine as small as possible because I'm day trading off them. So I'll move on to like the 15-minute chart, and I'll kind of try and scoop up the main wicks and bodies of where I think the price was bouncing. And I'm just going to use that. So these two levels, another way to make a zone, I'll show you right here. These two peaks right here are so close that that's two very important levels. So I'll just connect those into a zone like this. And I'll get it exact. But this was the one we just played off. This was 390. This was about 391. When the market opened right here, when we gapped below the whole previous day high and low, like we gapped down, that's when you start to kind of zoom out and look for the next area of support. I'm waking up in the morning, I'm seeing we gap down below the previous day's level. It doesn't take any time at all to zoom out on the chart like this and look for the next areas where price bounced off. Look for these major swing points. This thing sticks right out at you that's a main area to watch. It gets respected here. So naturally, when we're opening up right at this level right here, when the market's about to open and we're sitting at this little zone right here, zoom out on the chart, look for the next bounce areas. They were right here and right here. Create yourself a little zone, and you know that that's going to be the area it either bounces or breaks. That's going to be your main area of support. Look at what happens this day. Look how easy this was to trade if you were just patient and waited for your zone. It opened up, we sold off and bounced right off that level we just found. It gets respected, it's bouncing. Right here, it breaks through it. Now as it breaks through it, those are my favorite. I like to buy the retest of the zones. So that's kind of was my main focus. Then you can kind of add on your other little things you like to trade with. For me, I love like bear flags, like this right here. Huge move down. Look at that. We bounced off the zone. It's showing you that zone we found was strong. As it breaks it and retests it and flags up into it, I'm thinking, okay, that's A plus. That's sticking right out at you, you know? Like, as this flag breaks out of our zone, that's an easy short. Then it consolidates, it comes back up and it tests it again almost to the T. Like, that right there is how you find a strong zone. It really is that simple. As we open up and we're gapping up or down, zoom out on the chart and look for these main areas that kind of just stick right out at you that prices bounced before. Same with the top. Like if we're opening up here, we're looking at this level right here and this level. We're looking to break this one, and this one's going to be our price target. So that's basically it. Like, I'm trading off the previous day zones day to day until we get these huge gap up or gap downs. And then I'm zooming out on the chart and I'm looking at the major areas where prices respected that area before. So where you think the price is going, look back on the chart until you see that price on the chart and look how the stock reacted to it. It works for any ticker. I'm just using SPY because that's what I trade most. So to sum it up, I'm trading off the previous day's high and lows to give me that gauge on if we're ranging or we're trending. And then if we're gapping up or down and I need to find some bigger levels, I'm simply zooming out on the chart and looking for these major points of contact where we came down, bounced hard, or came up and rejected hard. But anyway, we're sitting at about 380 on SPY. So coming into the next week, if we're seeing downside moves, these are going to be our targets. 370, 362. I'm going to be creating my full game plan tonight, marking out all my zones and getting ready. But 370, 362, that's a big number. Below that is 368.80. Somewhere around there. Below that is 362. 362.22. See, like, when you see these charts posted like this, and people are like, oh, look, like right off my level, that's how easy they were to find. Don't think you can't do that yourself. Zoom out, find these areas where price respected. Chances are when we hit them again, they're going to get respected again. We're either going to bounce off them or we're going to break and retest them. Either way, depending on your style of trading, you'll be able to find a high quality play off that. 348.12, that's looking like that's going to be a major level as well if we ever get there. Just mark these major swing points. They're major pivot points in the price, and they're real easy to see. They almost stick right out at you. You don't need to be kind of like in the middle of this chop looking for zones. The good levels stick out at you. So that's basically it, guys. Not sure how long this video was or if that even made sense to you, but I'm trading off the previous day's levels. I'm making my zones. They're telling me if we're ranging or trending. And then when we're gapping up and down, I'm looking for big targets on the chart by zooming out and finding these big swing points. All right, guys, I hope that helps a little. I can go into more detail. If you have any questions, you can always leave them in the comments or message me, and I'll try and shed a little more light on it if any of that didn't make sense. But for now, have a good Sunday.